The stock NVIDIA market cap 5.4 trillion is bigger than the whole healthcare sector of the S&P 500. He asked the question, do you think this thing could be a trillion market cap inside of 12 months? I said easily, meaning a 50% loss. It makes me concerned that and Bitcoin has always been a global liquidity canary in the coal mine. So what it says to me is that Bitcoin is being sold to fund and chase momentum stocks, particularly Nasdaq. But I know when it's done, we're going to see $10,000 gold by 2030, I also made that call at the beginning of 2025. A lot of people that age, and most of the people that I'm talking to have already reduced their exposure to the equity markets, and they've already been following me. So the conversations are very light and enjoyable. I'm not trying to convince anyone that's 90% exposed to equities at age 80 or 70 or 60 in retirement. I'm having conversations just saying, hey, you have 40% cash, you're like Warren Buffett, that's great. I'm not going to tell you to raise even more cash. And I just basically tell them, you've made a smart move, take advantage of the deals when they come. But if the people that are 90% exposed aren't going to take me up on my services, because a lot of these people will leave, unfortunately.
What were your initial thoughts on the SpaceX IPO when you heard the news?
So if you look at the numbers, it's a 15% growth company, pricing at 100 times revenues. They switched the story from space to AI because they put XAI in there. It's overvalued. They've changed the rules to get it listed. A lot of people are saying it's unethical. I think what's going to happen, it's going to come out at 2 trillion. And I was talking to a money manager yesterday. He asked the question, do you think this thing could be a trillion market cap inside of 12 months? I said easily, meaning a 50% loss. It's overvalued, and there's no growth there. And look, if they're pricing it off an AI multiple, AI, I believe, is a commodity, and we're starting to see that the switching cost between these engines is effectively zero.
I want to circle back to your point on China and what you see as a slowdown in its growth. Is this something that the Trump administration wants?
Well, yeah, I did a media hit on Friday with Bannon's War Room to talk about China, because I think there's a misunderstanding. There's this belief that China is going to overtake the U.S. And we've looked at the numbers. We have a report for sale at our website, financetechnologies.com, a China report. We've done a deep dive, and China peaked as a percent of U.S. Price in U.S. dollars at 80% of our GDP in 2019. Since 2020, priced in U.S. dollars, their GDP is 60% of the U.S. Their GDP growth since 2020, priced in U.S. dollars, has been effectively zero. They've been printing 5%. So that, we believe, peak China is in the rearview mirror. They have a demographic disaster, and now the acute phase of their real estate crisis is hitting. So, when Trump went over to China recently, and President Xi talked about that trap that I can't pronounce, it's the cities trap or whatever it was called, saying that we need to work together and implying that U.S. was the weaker economy. It's the other way around. They're in deep distress, and Trump's tariffs on China are the right move because they're basically exporting deflation.
Sit with that number for a second. China's dollar-adjusted GDP growth has been effectively flat since 2020, even while they were reporting 5% growth on paper. That's the kind of gap between the official narrative and the underlying numbers that most headlines never bother to unpack. If breakdowns like this are helping you see past the surface-level economic story, hit subscribe and turn on notifications. We bring you conversations like this with top analysts every single week.
They're in a deflationary death spiral, much like Japan was in the 90s. And the difference is that Japan exported their way out of that problem, but they are 1/10 the size of China. China has been, to make up for their internal downturn, they've been exporting like crazy since 2021. And that's why we're having trade wars. And the tariffs are affecting them.
So will it be good news for Europe and the US if there's a slowdown in China? I mean, is there a benefit?
Well, so it's a razor's edge. You don't want them to collapse because that will have contagion effects across the globe. So we actually, and I had this discussion with Steve Bannon, we have to kind of work with them because you want to, look, I don't want to be, we put out a report that they're entering the acute phase of their crisis. If nothing's done, that's going to happen. So I'd like to be wrong and have the US and China work together to figure out how to structurally help them restructure and complete some good trade deals. That doesn't look like it's happening at the moment. So unfortunately, our predictions look like they're going to come true. So we don't want them to, but we need the US and China and Europe to all work together to prevent their collapse. I know that sounds crazy, but that's what you want.
What do you make of reports of China, moving away from the US dollar? You call it whatever you want, whether they're developing, alternative, trade, weapons, whatever you want to call it. I mean, do you think they are really, truly moving away from the dollar?
I think a lot of it's PR and hype and bluster. And yes, they're trying, but it's very hard to do. The dollar system is very ingrained globally. The other problem is the yuan is very overvalued, and they're depreciating their currency about 10% a year. So a lot of their trade partners probably understand that and don't want to, have a whole lot of reserves of yuan.
What's your take on the Japan story? They're trying to prop up the yen. It's not working. How big of a story is this to follow, Ed?
Well, look, you remember in 2024, there was a yen carry trade problem. And they were raising rates. They stopped raising rates, but it looks like they have to raise rates this time because inflation is going crazy in Japan. So my feeling is we don't want to see a yen carry trade problem, and that's why the U.S. opened up dollar swaps to Japan when the Iran war started. But we're getting close to Japan's oil reserves going the wrong way, and that could cause a balance of trade payments crisis. So we got big issues in Japan. I just feel like the global risks are just so immense at this point that you got to be cautious here. And look, let's talk about the Iran war situation for a quick second.
Okay.
The oil price and the stock and the U.S. stock market are telling you that a deal is imminent. That's what, ever since Trump announced the ceasefire, the oil market and the equity markets have gone in, the opposite way. Equities up, oil down. So it's discounting a resolution.
Notice the fork in the road here. A resolved war means manageable inflation, but an unresolved one could send oil past $150 and inflation into double digits. That's not a small difference. It's two completely different economic paths. And right now, the markets are betting heavily on only one of them playing out.
If we don't get one, our second scenario, we had two scenarios. The first scenario is playing out. Oil kind of peaks in May. There's a deal structured, then inflation rolls over, and we have demand destruction. We have some consequences from the war that add to our negative thesis already, but it's manageable. If we do not get a resolution, the price of oil may go up quite a bit because the oil companies, the executives are saying that in 2 to 3 weeks, we hit critical levels in some of these strategic petroleum reserve funds, and that oil could go to 150. If oil goes to 150, it's probably going to 200, and that's a disaster scenario. If that happens, we see inflation peaking out in August, headline inflation at 11%. Scenario one, we had it peaking out at 5%, and that looks like it's in play. So we need a deal soon. And so if we don't get one, look out.
Let's, speaking about immense risks here, let's talk Bitcoin for a second as we're speaking today down 6% today as we're speaking. Lots of pressure here on Bitcoin. Your take on what's happening here?
So Bitcoin peaked in October of last year. And in this most recent move, in 3 weeks, it's gone from 81,000 to 67,000. That's a 17% decline in 3 weeks. And technically, it looks like it wants to go find a new low at the moment. It may rally from here, but the Nasdaq and Bitcoin have a strong correlation, historically 95%. Bitcoin is a risk-on trade. So recently, that's decoupled a little bit, which implies one of two things. Bitcoin needs to rally back up to make the correlation hold, or the Nasdaq has to move down a lot for the correlation to hold. So given Bitcoin's decline, it makes me concerned that and Bitcoin has always been a global liquidity canary in the coal mine. So what it says to me is that Bitcoin is being sold to fund and chase, momentum stocks, particularly Nasdaq and semiconductors, which means the liquidity situation isn't as good as everyone thinks. Because if this was truly a liquidity-driven market rise, Bitcoin would be participating right now.
What do you make of Michael Saylor selling 2.5 million of Bitcoin? It's for his first sale since 2022. I mean, should we be reading into this, or was it simply to fund preferred dividends? I mean, is there a bigger story here, or?
Well, there are people. Look, the Saylor's stock has been a disaster for the last year and a half. He's selling some Bitcoin to pay some dividends. There is a thesis that he gets a margin call. I don't know whether that's true or not, but at these levels, it's margin calls. People have said in 74,000 Bitcoin is margin call territory. We're now at 67,000. We'll see if that continues to unwind the Bitcoin space, but it just doesn't bode well for global liquidity that Bitcoin is struggling, in my humble opinion.
Here's what makes this worth paying attention to. When an asset that's historically moved in lockstep with risk assets suddenly starts decoupling, that's often the market quietly telling you something about liquidity before the headlines catch up. And as we're about to see, that liquidity is now concentrated in a shockingly narrow slice of the market.
And that all the liquidity that's left is focused on AI and semiconductors. And I want to point out something that is pretty alarming. Semiconductors is a percent of the S&P 500 is 17%. That's one industry. And Nvidia, the stock Nvidia, market cap 5.4 trillion, is bigger than the whole healthcare sector of the S&P 500. These relationships don't last forever. Bitcoin, semiconductors are also now 30% of the Nasdaq. So basically, the only game in town is semiconductors and AI stocks. And I've been talking to money managers. Most are underperforming. They can't keep up with their benchmarks. Some are chasing, some are sitting out. To be an active manager right now is a disaster because you have to basically be overweight the very narrow part of the market that's working.
All right, let's bring it home on gold. Your technical roadmap still pointing to $10,000 gold, long term. What's the path there for you, Ed?
Yeah, so last year, the beginning of 2025, I did a couple podcasts where I said gold was going to go to 4,000. It by the end of the year, it went to 5,500, I believe, and peaked out. After it peaked out, people were asking me, is this a parabolic top? Is it over? And I said at the time, no, I think it's going to consolidate, which is very healthy. And that's what it's done. So, if you look, it's not down.
Yes.
If it was a parabolic top, the losses would be a lot greater right now. So it's consolidating sideways, which technically is very healthy. I don't know how long that consolidation will last, but I know when it's done, we're going to see $10,000 gold by 2030, which was, I also made that call at the beginning of 2025. So that call is intact. The fundamentals continue. Banks continue to accumulate, central banks continue to accumulate gold. Commercial banks are accumulating gold because they made it tier one capital in July in the US. And we have voracious appetites in retail in India and China, and of course, throughout the rest of the Western world. So long-term gold fundamentals are good. That means that silver should follow eventually, but silver is way more volatile and is an industrial metal. So be careful if our economic downturn call is correct, which I believe it is. Silver could be hurt more. Gold is, I think, long-term fine.
You mentioned a lot of wild cards. Could be any given Sunday, Ed.
Absolutely. Look, I did say on one or two podcasts when the markets were at their lows in the beginning of April, I said I have a feeling that Trump is going to, issue a ceasefire or try to negotiate, and that the stock market could rally and we could see new all-time highs. Well, we've seen new all-time highs, but it's been very unhealthy, concentrated new all-time highs. And the risk is, I don't like calling crashes, and I'm not going to call one, but when this corrects, I think the speed of this is going to alarm a lot of people. And remember though, you never crash from the top. We'll get a pullback, then a rally, and then if that rally fails, that's when you got to worry.